Hello, everyone. Alright, so I just wasted a whole bunch of time recording this video, 42 minutes long, and my mic wasn't on the whole time. So hopefully this will be a little shorter version, but there's a lot of things I want to talk about. First, I'm going to start with the important stuff, which is just uh just talking about the geopolitical situation and the risks in the market that I'm seeing markets price in. So I talked about last Monday. I don't know if I talked about it. I didn't post anything about it, but I saw last Monday, and you can see how this reaction on the Nasdaq, we ran down beneath the sell side liquidity, which I said if we reject it very quickly, I'd be more open to higher prices, and if we start to close beneath it and start making lower lows with the bodies, then I would be bearish. However, you see how we had a huge reaction. Markets were pricing, and you can see how oil had a huge rejection lower. Markets were pricing in a risk on scenario, right? Like silver was going higher on Monday, um, higher than gold. Gold was a bit behind it. So that was, and the dollar was going lower a lot. So this was showing that, okay, we have a risk on scenario. Markets and investors are now putting on risk. Now, that didn't hold up throughout the week. Obviously, there was more disruptions with the Strait of Hormuz, and there's three narratives kind of being pushed around right now, and so the markets are kind of in between both, and they're not decisive. The first narrative is coming from the media, where they're saying CNN and whatever are saying that the United States military underestimated Iran. You know, the Strait of Hormuz is a big problem, and we need to be ready to see much higher prices, and the risks are huge. Blah blah blah. Sorry, voice crack. Um, the however, the Pentagon is pushing a different narrative. They're coming out in their press conferences. They're saying that they've absolutely obliterated Iran, that they've taken out 90 all their navy, all their air defense, and I'm hearing different numbers all the time, but um, they're also I've heard their missile production is down 95%. Um, the leader, the president of Iran, most importantly, he's not shown publicly. He didn't even show a video, probably because he's injured from whatever, his whole, I think his whole family died in the first bombings. But they bombed over 90 military targets. And whether you believe all this or not, this is what the Pentagon says. They're also claiming that Iran is scared. Their leader is only sending out written statements instead of coming out in public because he's scared, and Iran is scared, and they're cowering in their underground holes and whatnot. So he's basically saying, the Pentagon Hezget is basically saying that, okay, this war is going to be over soon, that the United States has been extremely successful in this campaign, and so this is very different from what the media is saying. Now, the markets are kind of in between, and you can look at the credit spreads that I talked about last week, but they kind of declined on Monday, and then they slowly raised throughout the week. Now, they're not going crazy. They're still not going crazy. They're elevated, and that's normal because there's a big risk. There's also a bigger risk in the credit, and this has been a problem for a long time, but credit is really starting to become pretty bad. Like, the trend is not crazy yet, but the trend is starting to become very bad. We have historically low unemployment. We have low inflation. I think not historically low inflation, but we still have very low inflation. Yet the trend is showing that we are not on our way to, prosperity, to a golden age. Debt is just climbing, continuing to climb, and wages aren't keeping up with what real inflation is. So I know, like, on paper it looks like wages are growing faster than inflation, but in reality it doesn't look that way in other areas. So when you look at the debt numbers, and when you just look at how you yourself are living, obviously the cost of goods are increasing. Like, I can give you some numbers I remember off the top of my head, but 11% of seniors have to go back to work, and that's at an all-time high. Student loan debt is a 1.3 trillion, and there's a 25% delinquency rate in the last year. There's most seniors going back into work are because it's a poor economic outlook, and so it's not really because of the debt, but another good chunk, close to 30%, are going back because they just don't have enough money to keep up with the cost of living. And then some of them are going back because they're bored, but still, the trend is bad. If seniors have to start going back into work, that's bad. But not just that, but people have to start taking out hardship withdrawals from their 401ks, so their retirement savings account. They got to start taking out withdrawals to cover expenses. Most of it, like almost 80% of these, were either because of medical expenses or for to prevent foreclosures on their homes. So there's obviously like a lot of problems with the credit, in the United States. But right now we're not talking about that. These yields could be pricing in something like this, being more of a problem, people defaulting on their loans in the future, or it could be more about the Iran-Israel war. I think it's a little bit of both, but I really don't think that the markets are pricing in an escalation beyond a regional conflict. I don't think that they're thinking, okay, this is going to be a really big regional conflict that's going to go on for a very long time and disrupt what's going on in the United States and investment in the United States. So the markets are kind of conflicted between both narratives, but right now they're not in panic mode. Anyways, that doesn't mean that things are going to be healthy. That means that things are probably going to be more choppy. I think we're going to be more choppy unless you really have some bad developments coming in or some very good developments coming in. But until we have more information, right now I'm just assuming we're going to chop. I do think we're going to come back down to the sell side liquidity, and the fact that the bodies are making lower lows is kind of showing that we're probably going to continue going lower, maybe even down to these lows. But I mean, there's still a lot of things that can happen from where we are now to where we will be when we get down to these lows. You can always turn back around even if it's making lower lows, because right now geopolitics is running the scene, and when geopolitics runs the scene, it really matters what narratives people look at, and these can change on the fly. It's just the way it is. That means volatility. That means it's good for trading if you have models that are good with volatility. Anyways, on the daily chart, technically, what I'm seeing, again, I just talked about the liquidity area. We're rejecting these two levels, which are highlighted in light red. Just remember these levels. So when you go down on a lower time frame, you'll know what they are. Throughout the week, Monday, we climbed higher, then we consolidated, turned back lower, rejected off this 4-hour inverse fair value gap in a 4-hour order block. This candle right over here. And when you see an order block inside of a inverse fair value gap, ICT says it's a brick wall. I just wanted to reference this recent video. Anyways, then continuing on the 1-hour chart, I've written all these new week opening gaps. This is the difference between where we close on Friday and where we open on Sunday, over the weekend. So these gaps represent that. I track them out for a month ahead, so 4 weeks, but I might do a bit more. I don't know. I have right now I do 2 months, but the new week, there's no new week opening gap that's relevant to what I'm going to talk about today in the month before. But continuing down to the 15-minute chart. Actually, before I go there, I want to talk about why I have regular trading hours sell side liquidity and why I label other things sell side liquidity. I add the RTH because if you flip from ETH to RTH, you can see that there's a big difference. Markets look a lot different. Look a bit better on the 15-minute chart, but you can see a very clean market maker sell model here and here, and when you turn on electric trading hours, it doesn't look as pretty. Now that's because regular trading hours basically is when the stock market in the United States is open from 9:30 to 4. The price action within this is always more volatile compared to the rest of the day. Not always, but most of the time, generally. And so this is why it has kind of its own behavior. So I recently started using this again, just in ways to target. Now, before I go any further down to any more analysis, I don't want to overwhelm people, and I don't want them to see so many lines and be like, what the fuck? I don't trade like this. This is how, when I trade, I have a clean chart. Hold on. Let me remove. I have an indicator for the new week opening gaps, so I don't just draw them myself. I do sometimes, but if I have time before the market opens, so that I don't have to have this indicator open when I trade. But I usually look at prices like this. And I look for three things. Well, not three things. I don't look for much. Where I think price is gonna go, my daily bias, irrelevant to how I trade, which is why like I don't do all this analysis before I trade. I really just react to what price is doing. An example on my Wednesday's trade, I had a sweep lower, two down close candle, 940 and 945, and then we sweep above it, and we run into a new week opening gap that I would have had seen with my indicator. You can see how it can't really see it well because there's another gap in between it, but it's there. Maybe if I go all the way to the end, yeah, you see it. It's the same one from the March 4th. This is a new day opening gap, though. I might have labeled that wrong. Yeah, I labeled that wrong. I labeled it new week opening gap, so forget that. But anyways, doesn't matter. I'll switch it later. I usually don't even have these anyway. I just use the indicator. So, which I deleted by accident. Anyways, doesn't matter. I'll fix that later. Wait. Where did... I swear there was a sweep, whatever, it doesn't matter. Yeah, so anyways, I look for a sweep lower, and we get above it, and then I go short. You see how the 5 minutes swept, and yeah. Anyways, back to where I was showing you. I'm going to go through my trades. I just don't want people to freak out and be like, holy shit, this guy's looking at too many things. So let me start on Monday. Alright, Monday, I have this regular trading hours low. You see when we open up the regular trading hours at 9:30, we're above this sell side. Now, even though we took it overnight, we took this low overnight, on the regular trading hours, we still haven't taken it. So what happens is we open up at 9:30, we run down, we take this, we have our little Judas swing to this level, and then we run higher. I did get into a short to run out this low, and I broke even my trade, so I didn't lose money on it. But when I saw this whole price swing here get taken out, I don't really look at how the candles look on the going up, but I do look at how the candles look going down before we sweep it. If we see wicks in both directions, I don't like that, and maybe I'll have some examples of that going forward, but I don't like it when there's huge wicks in both directions. I like it when there's really clean and big bodies that show that it's evident we're going in the opposite direction. So this would be a lot not as good as this one. That's why I'm highlighting this one. I should honestly just get rid of that one. But we sweep that, I get into a short, and then what I see is we have this entire consolidation here. I'm going to go down to a 1 minute chart and get a better view. But we have this entire consolidation here. I'm looking at the bottom half of this entire range, or this entire consolidation. We continue to consolidate inside of it, and we're refusing to push lower to make new lows. Now, think back to the daily chart, what I showed you on the daily chart, right? Where we're failing to move past old lows, and so we're going back into the consolidation. But now we're going back here. So what happens if we run back up above this consolidation? We're probably going to consolidate for longer or start to go higher. That would be, unless, again, because daily, a lot of things can change over the span of days, but over the span of minutes, a lot less can change. So we're much more precise and technical when we are on the lower time frame, because a lot less can impact a shorter period of time. So if we are running beneath these lows, and then we're coming back and we're consolidating, we come back, we fail to go make lower lows, and we come back again, this is where I stopped my trade when we came back one more time. I just didn't want to hold on to it anymore because we just weren't moving past these lows, and I had a feeling that we were just going to continue going higher after taking out the regular trading hours low here, and how we were making higher highs above the overnight highs. Okay, sorry, I'm back. I had to go do something. So, anyways, moving on from Monday. Tuesday, didn't have a trade. Wednesday, we swept this 5 minute price swing lower. So what that looks like in the 5 minutes, you can see those two down close candles, and we ran up above it into a new day opening gap. sweeping above midnight and 8:30, so the swept kind of went above midnight 8:30, dropping down to the 1 minute. Look for my first fair value gap right there, minimum 4 hour. I was also wanting to see the regular trading hours previous day low get hit and see how when we hit it we reacted quite nicely. And again, I'm also looking at overnight liquidity, so extended trading hours liquidity as well as regular trading hours liquidity. Regular trading hours shows a different picture, but when they can line up, you have really nice price action. Yeah, you can see how in regular trading hours, failing to go above, we go above afternoon liquidity, but we fail to go above the high of the day, or we go above this consolidation, but we fail to make new highs, rejecting this area consolidation over here. Going into Thursday, you see how we open lower, much lower, and we're making lower lows and displacing beneath them. So I shouldn't have be going long, but my rule said go long, so I still went long. And again, it's irrelevant what I think, what my analysis think. I just react, and well, my setup was there to go long. Was it short? No, sorry, this is go back to lecture on. Yeah, my setup was there to go long, so I went long. See, we had this price swing up and up on the 5-minute chart. It looks like a nice price swing, clean. And then we ran out this. I didn't have a chance to break even or anything. I just got stopped out immediately. And I did post how I was uncomfortable with, not uncomfortable. I posted about how initially going into the day I wanted to see longs. I wanted to see shorts. I wanted the price to go lower and continue moving lower. Yet I still went long, and that's because I just followed my rules, and instead I didn't follow what I thought would happen. I followed what my rules said to do, and that's very important. Anyways, moving forward to Friday. Now Friday I want to talk about this one because Friday was a very big trade for me, because I was struggling with this one, to be honest. We had a really nice sweep that went lower. Now usually when we sweep price swing that's inside a consolidation that looks like it's part of a consolidation, I don't take it. But this one looked like it was reaching outside, like it wasn't really consolidating, it was going higher, then it moved to the side a little bit, and then it made a new low. So I still took it. 9:30 had wicks in both ends because it was just a bit volatile at 9:30. But again, I don't look at how it looks on the way up, I just look on the way down. And then once we go above it, we go up and above it into a new week opening gap. You can see the orange lines there. And in hindsight, this looks like a really good trade running out of from the 4-hour inverse rally gap and order block. But I'm not looking at all these things when I'm trading. I'm really looking at a blank chart, and I'm just looking at the 8:30 and midnight openings and the new week opening gaps. That's it. So I have my little indicator over here that just kind of shows me where all the gaps are, and the 8:30 and midnight opening. That's it. So I don't have any drawings on here, and when I saw the sweep, I was very uncomfortable just because it doesn't look as good as like Thursday's sweep look or Wednesday's sweep. You can look at how nice Wednesday's sweep was. It was much more excited, even though there was a bit of wick, but I mean overall it was much more excited. Like the bodies were nice and big, and it was clear that it was sweeping to go lower. So at the same time we had been going down Thursday, so I did want to see bearish, and it did line up with my bias. So that was kind of one thing that made me confident. The new week opening gap, it's stopping just at the new week opening gap, is another thing that made me confident. So I took it anyway. But when I got in here, I should have gotten up here at this gap, but I got in down here. I was super scared about holding this. I thought it was going to get stopped out, and so I got in and it just immediately went to drawdown. It took a lot of my mental equity away. I was drained after it going back into profit just by getting into the trade, and then seeing that happen. I got drained mentally, and I had a hard time holding on to it. I kept wanting to take partials. I had deleted a lot of tweets about taking a partial, when I would take a partial. I remember I wanted to take a partial when it made it. Well, hold on. This is when I first I'll show the tweet when I first thought of taking a partial. So this is the second tweet I did after this tweet right here where I talk about how I entered. But I said I don't feel comfortable with the price swing we swept. It looks like it's part of a longer consolidation. My stop is break even, but I'll take the smallest partial and put my stop back to where it was if we get one more run down and pull back again. Before that, actually, I think I deleted a tweet saying I would take a partial the next new low we would make because I don't really like the sweep, and I don't like how it moved far into my stop or my drawdown room. And so I was just really unconfident about the trade, but I knew that was just me talking. I've had it happen many times in the past where I take a partial on a good trade and it ends up working, and then I have to sit with myself and be like, fuck, I just missed out on all that money. Because the thing is, and what I told myself is, before I got into the trade, I had no plan to take a partial. So I should have no reason to take a partial once I'm already into the trade. And I know this is a long trade to hold. Like, think of being in this trade from 9:52 all the way to 11 o'clock. Like, that's over an hour that I was in the trade. So it was, and I watched it the whole time. On Wednesday, similar thing happened. We pulled back and I read a book to distract myself, over here when we pulled back. But I had seen almost no drawdown. It was really easy to hold it. I was much more willing to hold it than over here where I kind of got scared and was like, oh shit, like I don't know about this when we pulled back here. So there was a big difference between how I reacted on Wednesday and how I reacted off this trade. It's the end of the week. I've been putting on risks all week. I didn't have much time to really recharge and to start that new week. So I'm already up a certain amount this week, and I'm thinking about that too. So it's hard to really focus on following the rules sometimes when mentally you're just drained. You need to stay disciplined, yet your mind is just tired, right? So what I told myself again was I had not planned on taking a partial before the trade. I will not take a partial because I'm following my plan. And I sat through this whole price action sideways. I was saying I want to take a partial at new low. Then I started saying I'm going to take a partial when an up close candle closes above the previous down close candle, which happened right at 10:20, and I still didn't take a partial. Then I started saying at the time there were wicks that were wicking away from this sort of area that I'm pointing at over here. This kind of area over here. And so I said, okay, if we start to close above these wicks, then I'll take a partial. And then we close above these wicks at 10:23, and I still didn't take a partial. And then I just kind of sat there holding it. And the whole time I was on the phone with my fiance. You can see in the trade playback, I'm talking with my fiance. You can't hear me because it's sped up and muted, but I'm still talking, and I'm telling her about all these things about how this. I'm not telling her when I want to take partials. I did tell her. I did tell her the ideas I had for partials. But I'm also trying to keep my thoughts to myself, and I love her for this, but she kind of let me just handle it myself. She didn't tell me what I should do, and she kind of just let me just go through my own emotions, which is really nice, because at the end of the day, I didn't take any partials, and I told her, I was telling her, I really didn't feel good in this trade, and that's why I wanted to take a partial. I didn't want it to lose money, but it's okay if it loses money. And that's the thing, that a lot of beginner traders think that they can come into this and they can start making a lot of money right away, but you need to learn to kind of switch your mind into this the way I'm thinking. You can't just come into the market and start making money right away, because you need to learn how to follow rules. You need to change your mind in order to accept taking risk. And a lot of people, when you say something is risky, they think of it as a bad thing. They're like, oh no, it's risky, I have to be careful here. There's no such thing as thinking about risk in that way in trading. Risk is a given. You have to accept risk. Trading is risky, and that's not a bad thing. So a lot of people think that, that can come in trading and start making money right away. But again, the way I'm thinking here, I know if it was 2 years ago and I was in this trade, I would have probably closed it or taken a partial, and then I would have reduced my bottom line on my winning trades. My overall expectancy would have lowered. And I do think it's a good thing to take partials. I'm not shitting on partials, but it's just not part of my plan. Right now, when my size grows bigger and a partial is much more meaningful, because right now I'm trading a limited amount of micros. It's not like a CFD where I can have lot size. I have a very small amount of micros, and I'm very limited in how many partials I can take. So like on this trade, I could have taken 2 partials. That's it, and each partial would have closed 33% of the initial risk. So it's a huge chunk of partials that I'm taking. But eventually, I do want to do something where once I have more data and I figure out on average the trades that don't look like Thursday, that run straight to my stop, like trades like Monday where they do run for some profit and then they come back on you. I'm thinking about 1.4R, 1.2R, anywhere between that is a good kind of area. But around there, I'm going to take a small amount off. And that's a guarantee, almost guaranteed for most of the trades. Like 80% of the trades are going to reach there. So I might as well take a partial there. And then that way it reduces the amount I'll lose on most of my losses. And it will reduce the amount of money I'll make. But then I can also start holding for runners because almost all my trades continue far past to lower targets. So I don't know. These are all things I'll have to experiment when I have more data and size, where partials actually are significant. Like they're still a huge chunk of the money I would need to survive and live on, and so yeah, and that allows me to also continue compounding the account, keeping up with the mental equity. Like it'll reduce the amount of risk I have when I take a partial, and it'll make me be able to hold on to trades easier. But anyways, I did not take any partials, and then I tweeted this at 10:35. Much more confidence in 24611 after the last 2 candles because I saw that we had rejected, and then we had started closing beneath these fair value gaps and up close candles, making lower lows. And it's the same thing as sort of Monday. We're now instead of making higher highs, we're rejecting, and if we had rejected and came back up, I would not have liked that. But with the daily chart, it's the same thing again. We're pulling back and we're closing again lower. So I liked how over here we started doing that, and then I just needed to confirm it. I guess once we closed at 10:40, I almost knew the trade was gonna win, and I was just like sitting back and just doing whatever. I don't remember what I was doing. So yeah, I mean, it was hard to hold on to this trade, but this is like a very good example of where I could have done something wrong, and that could have stuck with me the whole weekend and ruined my weekend. And if I had to trade tomorrow or I had to continue trading within that session, it would have been even worse because I would have had that mistake in my mind and it could have messed up with my discipline, and just me following my rules. But yeah, these are some of the struggles as a trader. Like, that's why it's not easy being a trader, and I mean, it is what it is. But yeah, anyways, thank you everybody for watching. I hope everybody has a good rest of the weekend, and good luck on your trading next week. And yeah, thank you.